And good afternoon. Thanks for joining us. Welcome into Market Talk for this Tuesday, December 21st. Great to have you here joining us and making us part of your day. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web. Always got to do a plug for our website. You can find the latest agriculture news, market information, and so much more online. Also, all of our streaming sources are there too. Markettalkag.com is our home on the web, one-stop shop where you can find the links for everything. Well, we have had a pretty busy day in the ag commodities and the broader commodity markets in general. It was a risk on tone. We saw the outside markets recover from yesterday's sell off, and grains really had some good positive money flow strength into the grains and the livestock markets for that matter. Let's talk about all of it. Let's bring in our good friend Bill Biedermann with agmarket.net joining us here for Market Talk today. Bill, great to have you back on, sir, and a busy day, no doubt, for you guys with all this green on the screen here today, Bill.
Yeah, we haven't seen this in a long time, Jesse. So this is a lot of fun, and kind of really didn't expect it going into the holiday weekend. When we were going into Thanksgiving, we were all eating turkey because it was a good market, and here we are again. So can't complain.
No, we cannot complain. What are your thoughts with the positive money flow here today, especially soybeans, Kansas City wheat, probably the strongest of the grain commodities, and really good strength in cattle and hogs as well. Outside markets recovering today. I know we have the Omicron fears, but it just felt like a risk on day across all commodities here today, Bill.
Right. The South America weather has been kind of creeping up in that southern Brazil, northern Argentina, Paraguay area. And today it actually caught a lot of fire because Dr. Cordonera came out and he lowered the Brazilian crop estimate by 2 million tons, Argentina by 1 million tons, and Paraguay for 1 million. So that's a 4 million ton revision. Now, to put that into perspective, we're still talking about a 142 million ton crop versus 137 last year. It's still huge. It's still big. But the fact that it's already being assessed and perceived as a crop reduction, that's pretty significant. So that's number one. Number two, the extended forecast continues to be threatening, going out to 10 to 14 days. So this will be a big 3-day weekend when we come back. That'll be a big driver. But Jesse, there were some other issues that happened, like as you mentioned, the coronavirus threat seemed to kind of dissipate a little bit over the night. And there was a big article out in a UK publication citing that Russia was probably going to be invading into Ukraine over the Christmas holiday. I have a hard time believing that because if they did that, I mean, the world would quit trading with Russia. I mean, immediately, the Western world. And which would be great for us because then, you got a lot of wheat, a lot of corn, you got a lot of fuel that could come to our shore for business. And that would be great for our markets. So that's provided some support underneath it. Crude oil certainly was a leader today from the get-go. And that was the reason.
Well, I know as well, you mentioned the dry weather concerns in South America, and on the wheat side, you couple that with that Russia news you mentioned, but also here in the U.S., the dryness in the southwestern plains, that's a big issue, and that's part of why we saw KC Wheat as one of the leaders today, Bill.
Oh, on our Monday video in the afternoon this week, Jim was showing us the weather drought maps for this year, and then we were comparing it with 2011 and 12. He did a great job. So if you want to go see that video, it's still out. It's an amazing threat. I mean, we really have a bigger dry mass than we did going into late 2011, going into 2012. So there's no way to ignore that. And that is a threat. And I was talking to one of our clients out in Kansas today, and he said they had so much wind going in line with their drill rows that they have wheat that looks like it's dead. He doesn't think it is, but he said it's definitely been hurt.
I know as well. Fires out there in Kansas really impacting agriculture there, and that's another story that maybe not catching as many national headlines as it should, but that's another issue out there in the Plains states as well, Bill.
It's really sad. He was talking about it. He knows some people that are in that neck of the woods that lost some homes. It's pretty devastating. And like you said, I have not seen that at all on our news channels. So it's just, it's not even a deal. But boy, I'll tell you, when it's that dry, if you're having grass fires that are taking up, a couple 100,000 acres, that's pretty dry.
On the soybean side, beans, highest close in 3 months. I think we could safely say that. A lot of good strength in meal and oil. We're seeing a little bit of end user buying in meal again today. It appeared this soybean market really, really looking strong here as we head towards the Christmas holiday, Bill.
And the good thing about the chart is today is the first day since back in, I think, September that we closed above 1291. So on a close basis, this is a pretty positive thing. We'll get a close probably up or over that 1306 area. That'll immediately be pushing charts towards the 1320 area to 1330 area. It's very interesting to see how the charts are starting to do about a day ahead of what the forecasts are running. So like I said, I think the week between Christmas and New Year's is going to be significant. I mean, if you're guessing right and positioned right and we come in with dry weather, I wouldn't be surprised if the beans don't open 16 to 20 higher. On the other hand, if it's raining, we all know that markets like to go down pretty fast. So it's going to be a wild week next week.
Stair step up, elevator down. Corn market, it's right at that $6 mark here. And it's one of those things where we've seen this overhead resistance. We've just beaten our head against this glass ceiling for so long. Was corn more of a follower today with the strength of beans and wheat, Bill? What are your thoughts there? And I would imagine as well, if we get dry weather again next week, we're going to be able to move this thing well through $6, it feels like.
Yeah, I believe that we'll be pushing towards that. I believe 627 is the monthly 50% retracement of this summer's highs when we put in those deliverable highs that were up around 750. So we get up around that 627 area, that'd be about all we would expect at this point. I mean, it would take significantly dry weather. Here's another thing, too, that's supporting the corn is the trade ministers. Now, this is like third and fourth tier trade ministers of both China and the U.S. have continued to be talking. So that's encouraging. I don't think too many people have known about that. The geopolitical front is negative to trade with the Chinese. But, if they start seeing some problems in South America, they're going to be here buying. They have to buy to keep their people fed. They can't get around that. And there's just not going to be enough coming out of the Ukraine, and if there's a problem.
And I think as well, we're going to get into that window where we start to see typically corn exports from the U.S. And I'm thinking from what you're saying and from what I'm hearing from other folks, it could be a very active January and February on the corn export front, Bill.
It should be. We're still hoping for another 3 to 4 weeks out of the beans too, but the corn really should kick in here hard. We should be seeing 60, 70 million bushel weeks. If we don't, it's going to be a real concern. And honestly, Jesse, it is a concern when you're looking at year-to-date purchases or shipments to China. There's no doubt it's a disappointment. It's a concern. I think there's a lot of politics that are going into that. There's been 2 weeks where they actually bought grain from South America when we were cheaper. So that's kind of hard to explain other than just political. But like I say, there's a lot on the table. There's a lot of moving cogs right now, and it wouldn't take a lot to shift some of that demand to the U.S.
Outside markets, crude oil back above $70 a barrel today. The outside markets in general recovering from yesterday's sell-off with the COVID worries. Anything you're seeing in the outside markets here this week that have your attention?
Well, we're watching. We always, keep an eye on the dollar, and hopefully the dollar will kind of run into some resistance right about here. I know it should be struggling around that 97 to 98 range, and maybe it'll start pulling back down from there. The crude oil is going to be very, very sensitive to what's going on overseas. Again, I don't really see why Putin would push himself into a corner where nobody's going to want to trade with him. But, if he does, this crude oil is going to have an 8 in front of it, not a 7, real quick.
Let's move over to livestock. Protein complex. Really, they participated in the buying today as well. Hogs up triple digits. Cattle futures up triple digits as well in many contracts. I know cattle. That headline broke. South Korea suspending beef imports from Canada following the report of mad cow disease there several days ago. That seemed to be a news item, at least one news item that really helped out the cattle market about mid morning on Tuesday, Bill.
Yeah, we had a nice rally all the way back up to the moving average, almost to the downtrend that we've been looking at for the last 3 to 4 weeks, up in that 138 area, 137 and a half on the February. We need to get through that though, Jesse, to really turn the tide. We got weights going up. I think they're up like 9 pounds this week. And the dressed beef market is soft, as it always is at this time of year. We really need to see that product movement start to pick up on the counter in order to start feeling like the bottom is in. Personally, I think that cattle are a buy, but I'm not convinced yet that the low is in on the seasonal low that we should be putting in soon.
I think another thing to keep in mind as well, we're going to have cattle on feed report coming up Thursday after the close. We got a hogs and pigs report coming up. So we got a few reports here before the end of the year that are really going to maybe help shape both our cattle and hog markets at a time when we typically see quiet holiday trade, lethargic trade in these livestock markets, Bill.
Yeah, you're right. We're not seeing that this year, and this is kind of a gift on the hog market. It's really perked up back to where we're pushing into those November highs up around 84, and we might test that area before those reports come out. The cattle market, I just feel like this market has a little bit more downside in it. It's hard to imagine the cattle going down when the hogs are going up, but from a selfish standpoint, it would be really great to see that cattle market come down about $2. That would wipe out a lot of week longs. That would get us down to a cheap price where demand would really be strong underneath this thing. I think that low would hold for quite a while.
I definitely would agree with you there. It'll be interesting to see what happens. We go through the rest of this holiday shortened week and then get into next week's final week of trade for 2021. Bill, great stuff as always. Any final thoughts you have for our listeners and viewers here today as we enter into the final trading sessions of the year?
Well, I think that you really need to be looking at, these prices, even if like we've still got some corn in the bin and we're thinking, man, if we do go to that 620 level, that might be a great place to just kind of finish it off. And we've been buying 30% of it back with options. I bought some yesterday for like 10 cents. Those options are great. They last all the way till July. And I bought some that last all the way out till next fall. So those kind of ideas are really good. Same with the beans. If you got any beans left, this move is what we've been all hoping for. So take advantage of that. The bean thing could really turn negative over the course of the year if South America ends up with a good crop and we end up with more acres. So that's a biggie. And, we'd love to see you at some of our meetings we got coming up. So go to our website and check that out.
Yeah, those meetings can be found at agmarket.net. And I know, of course, Bill, if folks need a little advice, they can find all your contact info on the website, agmarket.net. You guys have a great app as well. They could download a lot of resources to help people.
That's right. We'd love to have you call us, and we'd love to walk you through some of the tools that we offer.
Agmarket.net's the place to go. Bill Biedermann with agmarket.net. I really appreciate you being on the show, not just today, but all throughout the year. And we'll look forward to talking with you more in the new year. Until then, I wish you and yours a Merry Christmas, sir. And thanks so much for the time.
Thank you, Jesse.
That's Bill Biedermann with agmarket.net. That's going to do it for Market Talk on this Tuesday, December 21st. Find us at markettalkag.com. I'm Jesse Allen. Have a great